Hey everyone, Charting Man Dan from ChartGuys.com. You know, behind every single video that we put out every single day, there's a wonderful community of traders that we want to invite you to be a part of. Try the free 7-day trial and gain access to our live market broadcasts every morning and afternoon, interact with hundreds of like-minded traders, or take part in one of our dedicated chat rooms, each led by an analyst that's there to answer your questions in real time. Our trial is risk-free with absolutely no commitment or credit card required to experience the TCG community. For those looking for a head start in technical analysis, check out our entries and exits course in the link below in the description. Get up to speed with the fundamentals of TCG technical analysis and experience over 5 hours of great community-driven trading education. Hey everyone, checking back in on gold and the miners, switching to a gray background so I don't burn the eyes out of my head. And before I get into it, I have decided recently that I'm not going to touch bull miners, and I don't like the past 2 months with the correlations we've been seeing with the miners not reacting to what we're seeing in gold, and the market's at all-time highs. So if the market's extremely strong, and then at times when we see gold make bullish moves like we saw this past Friday, to see that the bull miners are not really responding to that, that tells me that playing bull miners is swimming upstream. We have the trend favoring the bear miners for months now. So personally, I would only be looking for entries on the bear miners, looking to have that momentum in my favor. And then if there is no entry in bear miners, I'm playing something else. So that's just a point to expanding your horizons in terms of what you are comfortable playing, educating yourself in other, either if you're only trading gold and these miners, you're really putting yourself in a box. So I like to jump around from options to miners and commodities to the MJ sector. Now I'm neck deep in cryptocurrencies. So really, it's just being able to be agile and jump around and follow the money will really benefit you in the long run, and it will keep you from forcing trades. Right now, anybody that wants to be playing bull miners, in my opinion, they're forcing trades. And obviously, that's not something we want to be doing. So looking here at gold, the bulls had a huge reaction to the data pre-market on Friday. A really strong response, breaking to higher highs and running the whole day, closing very strong. So we look at the daily time frame, and this is giving us higher highs after the consolidation that we had seen. So a nice big follow-through move by those bulls. And the next resistance I'm looking up at would be up here at this recent lower high. That was at 1288. And then we're looking up at 1295 as the highest price that we've seen in quite some time, about 6-7 months. So a nice save by the bulls. It looked like we were going to start consolidating, but that data giving the catalyst to be moving forward. Weekly time frame on gold, trying to break this downtrend, and we did just get above it. So this is a significant break in the short term, but we do need to get over that 1295 level. Get over 1295, and we have a nice another leg to the upside in terms of room before the next resistance. So let's just look at this daily time frame for gold again, and look at that candlestick. So this is with the market hitting all-time highs and being extremely strong on Friday, and we have gold extremely strong on Friday. So normally 4 months ago, we would anticipate that the miners would have a huge day today, or a Friday. And you look at this, and it's a very lackluster day. That is a pathetic day for the senior miners. Junior miners had it a little bit better, but really, you can just tell this is the only example I need where if these conditions in the market in gold happened 4 months ago, these miners would have seen 2 to 3 times as much upside as we did see. So it's clear that the significant bull momentum is gone from the miners as of this point. So we're in a consolidation pattern where we're just seeing choppy action, tightening up, lower highs, lower lows, and now we're seeing higher lows and higher highs. So we're very, very tight here on these senior miners. We're looking at GDX, and support is down here at 2244 and 2220. I'm looking at resistance of 2305 and 2339. So that's a very tight range to be watching. And we look at the weekly time frame, and we can see that it's just a little lower high, lower low. It's fairly contained, but it's obviously a little bit of a downtrend. And we compare that again to the weekly chart of gold, and it's just been bull 3 weeks in a row, and we're not seeing anywhere near that kind of action on these miners. So that is the reason I'm not going anywhere near these bull miners anytime soon until I see that trend change. Junior miners had a little bit better go of it on Friday, but overall a much weaker chart with a much more clear lower high and lower low pattern. Same little lower high, lower low of consolidation. I'm looking at support of 3104 and 3089, and in terms of resistance, 3235 and 3330. And checking in on the weekly time frame, again, the past 3 weeks for gold have been on fire, and we're seeing consolidation and nothing. We've seen one bull week in the past 7 weeks for these miners. So very clearly, these bull miners have no momentum, and it's very limited upside. So that's my take in terms of what would be the smartest decision in terms of trading and profitability and win percentage on your trades would be to just avoid these bull miners until we see the trend change. So heading into Monday, let's see where these bear miners are at. Let's see where Dust and JDST are. And we can see a tight range here. We're going to see a clear break in one direction or the other. And this is actually the weekly time frame. So this is a longer term to be looking at. We've got a range of 26.31 support and 38.68 resistance. So obviously that's a wide range. We can zoom in and get a little bit better. And we can see it's almost the exact opposite consolidation, obviously, because it's inverse. A little higher low, higher high. So the bulls want to see a break of 31.61. And again, the correlation overall, if you are playing the bear miners, I would rather be playing JDST than Dust, just because the junior miners have been a bit weaker historically the past couple of months. So that's what I got. I'm looking at either bear miners, JDST, and Dust, or I'm not playing the miners at all. So I appreciate you watching, and we will check back in throughout the week. Have a great weekend.